Good evening, everybody. Back again, as mentioned, for a semi-deep dive, mini deep dive into Copart. Copart, again, is another company that I haven't seen a whole lot of discussion on, a whole lot of deep dives at all on. There are a few. I just did a video on Corvell Corporation, which really is not, really doesn't have anything out there at all on the internet, even on YouTube, on the internet, on Reddit and such. I really have not found a whole lot on Corvell. So similar to that, Copart is another stock. As a reminder, you can see it's a 13% position. All my positions outside of Adobe are currently at 13% weighting. And again, I just started this investing journey in my brokerage account. I've been managing my retirement accounts for a while now, but from a brokerage standpoint, I'm starting with $1,700 in January of 26, and I am the goal is to get to $100,000 total by the end of 2030 in the next 5 years. So that's an 18% return, and really glad that you have joined me for this journey. So before diving too deep into it, I want to give my high-level thoughts on Copart. Certainly welcome to watch the rest of the video, hear a little bit more about what I have to say in details. But what I like about Copart, it aligns with definitely two, maybe three of my investing pillars. Most notably, they are a choke point, as I call it, in the economy. They work with insurance companies. They deal with cars and other vehicles when they are totaled or damaged and need to be sold or for parts or resold to the secondary market, either here in the U.S. or internationally. And there's really two players. It's a duopoly. It's IAA and Copart. There's a huge difference between both the companies and just the mindset, the management. Copart owns all their land, which I actually really do like about the company. So they're a choke point in the economy. They're not going away. A recession will not really impact. People still drive in a recession. Actually, I would venture to think that as companies continue to push people back to the office, which I just heard, other, let's just say Fortune 100 companies, Fortune 50 companies are starting early this year to require in-office work. I think that Copart's just going to benefit from that. The founder is still on the board. Willis Johnson founded the company. He was CEO until 2010. He's still on the board. He owns 5% of the company. They have consistent, predictable growth. I'll dive into their most recent quarter here in a little bit, but what I really like is that they've always grown. Again, revenue has fluctuated, upwards of 20% year over year, 10%. I think most recently, right now, trailing 12 months, is they're in 6-7%, which they've been before. But what I like about their growth is their earnings per share and free cash flow growth opportunity, and the ability for them to flex that up and down as needed. And that'll be evident at the end of this video when I talk about their financials. They have a huge cash position, 14% of the market cap, about $5 billion, which has been growing, which I actually like that because they're disciplined. They're not just throwing cash into things that won't return. So they've been sitting on their cash, kind of the Warren Buffett style, building cash position, and are ready for deals if they come along. Which I've seen a lot more on this, but definitely something feels to be brewing in the economy right now. So I think that we'll all have some opportunities here, possibly this year. We'll see. I like that they own their land. Like I said, they invest in real estate. They own a lot of real estate, hundreds or tens of thousands of acres, and this is really not reflected in the value of the company. I mean, they probably won't ever sell it, so I guess it's not that huge of a deal. But just the control that they have by owning their land is a significant advantage, I would say. They have a long-term mindset. They really invest for the long term, decades. And then again, the fundamentals. I really like where the stock is at. Again, I invest in companies, but I'm not going to invest in a company that is overvalued or it's at its peak. Even slightly above fair value. I'm really looking for good entry points to start positions and then build over time. So Copart, gonna dive deeper. I'm gonna so this is the most recent letter to shareholders. This is the best outside of the earnings calls. This is the best way to view, get a sneak, or not a sneak peek, get a view into the company, what they're thinking, what they're doing. And if you look into this, the most recent earnings call this quarter, they had a little bit of a tough time growing revenue less than 1%, which actually was only, I think, $200,000 less than expected, or maybe $2 million less than expected. So again, not a huge miss at all. It was largely expected, but one of my concerns, to be honest, is this, and they call it out in the letter here. It's this the shift in policy, where basically consumers are deciding to decrease their coverage on their auto insurance, sometimes completely foregoing their auto insurance, and that's leading to less cars going through the insurance process, which impacts Copart. They were very clear in this letter and on the earnings call. They don't think this is a long-term issue. They think it's cyclical, which I do believe them. I think inflation has been pretty rampant in the last few years, and people are getting a little pinched on their finances, so they're starting to look anywhere and everywhere to cut down on costs. So again, I'm not going to read all this. I would really encourage you, if you want to look into Copart after this video, or just if you're looking at it right now, I would encourage you to read these letters. Look back at their annual reports, their SEC filings. This is really just a quality company that is really at a discount right now, and there are still long-term tailwinds that this company will ride. One of the fears right now, I think, that's causing the stock to go down the last year is autonomous vehicles and less accidents, and but I think that those fears are overblown. They certainly are valid. But I think at this position, or at this stock price, they've certainly been priced in, probably overpriced in, honestly. So as long as Copart continues to execute and do well, and allocate capital in a smart way, as they always have, they'll be fine, especially at these levels. So I'm going to touch on a little bit on the board of directors. This is actually what I like about the company. Not a lot of people have talked about this, but again, as I mentioned, Willis Johnson, founder of the company, is still on the board, and is chairman of the board. He owns 5% of the company, which I really like. His son-in-law, he was the co-CEO up until last April. Well, I guess it's now April of 2024. Again, still on the board. And then if you just scroll through, again, I'm not going to dive too deep, but the board in this company is really, really solid. They have a lot of good experience. I read a book recently about the importance of board of directors and how they really steer and guide a company. And I really like this board. I like the experience that they have. I like the different industries. I like the several Copart current and former Copart employees. There's just it's a good board, honestly, and I think that again this temporary blip in stock price, as we saw in 2022, as we've seen previously, will pass. Honestly, and I'll dive into this in a second. Here we go. I think one of my theses is that they are going to buy back some stock this year. And really probably this quarter, or really last quarter, if not this quarter, which we'll find out soon. And again, so that's just a little bit on the company, what I like about them. And then so I'm going to take a few minutes here to dive into the fundamentals, the stock price. As you can see, 35% down over the last year. Really been rough. Only 18% over the last 5 years. And as you can see, this dip has happened before. Technically, we're really sitting at what I would think is support where the peak was last. Actually, what I really like is just on Friday, I mean, they really took a nosedive down to some of the lows of the last year. Actually, the lowest of the last year for sure. They're back at 2023 levels. And I just think it's a really good entry point. So looking at their fundamentals, again, revenue growth, I'm not quite as concerned with revenue growth. I mean, they've had ups and downs. Obviously, they're a little bit flattening out right now. But what I really like to see is their earnings growth. Very consistent, double digits, mid-teens, let's call it. So their revenue can grow 6%, but they can grow their earnings 14%. And then also the free cash flow is a significant growth opportunity stable part about the company that they can grow. As you can see, I mean, they've really been ramping up their free cash flow growth. They invested a lot, and they had some interesting accounting things happening in 2023. But since then, they've really, really grown their free cash flow. And I think this is significant. And one of the things I'll point out is that they're growing their earnings per share 14%. I'd call it, they could easily go 15% without buying back any stock. Look at that. I mean, they haven't bought back stock. Really, let's see. When's the last time they actually bought back stock? Repurchase. I mean, they're buying back, a little bit. Oops, sorry. I mean, they literally haven't bought back stock at all in the last 5 years at least. So, again, I think this is an opportunity for them. I think they might pull the trigger. We'll see. Again, $5.2 billion cash position. Look at that. I mean, they have been just stacking up on cash, and I think that is going to be a competitive advantage. No debt, which again I really like. Their net cash position continues to grow. Book value per share grows, which I always like to look. Their equity in the company, it's just it's amazing. And then, the last thing is the valuation. So they're actually at a very, very low. Again, they were at a 27 forward PE back in 2022. Oops, 27. They're now just above a 23 forward PE. PEG ratio about 1.5. I do look for companies closer to the 1 PEG ratio or less than 1. But for a company like Copart, how quality they are, to have 1.5% PEG ratio, I think is undervalued and an entry opportunity. Mainly, again, like I said, because of their ability to buy back stock and really, really flex their earnings power, which I think is a competitive advantage. I will, again, price to free cash flow at 25 times for a company growing free cash flow. As you can see, really over the last 5 years, pretty steadily. I mean, you've got 13%, 28%, 48% growth year over year for free cash flow, and you're paying 25 times that. again, historically very, very undervalued. ROIC, I will say this has been a concerning metric, and I've seen it pointed out in other deep dives. What I think this is because they're not investing quite as much, because their cash position, I think it's throwing that number off. What I like to see is kind of a stabilizing ROE, which again, I don't think you should read too much into that for a company like this. Free cash flow yield of 3.8%. I think that's significant for this kind of quality company, especially since there's relatively no stock-based compensation. I mean, look at that. You have tech companies out there significantly increasing their stock-based comp and basically diluting shareholders. So that's not happening here, which I really like. Again, mini deep dive. I could go deeper. I want to keep it brief. This is, I think, an excellent opportunity to add to Copart for the long term. It certainly could keep going down further. I have no idea, and I could be completely wrong. But they have a track record. They have good management, a solid CEO, a solid board, long-term focus, long-term mindset. And I think they are poised to return 20% a year, at least for the next 5 to 10 years, on average, especially at this entry point. And so that's all I have to share. Would love to hear your thoughts. Would be curious to know if you are looking at Copart, if you think I'm crazy. Time will tell. Like I said, my goal is to get about an 18% return over the next 5 years to get to $100,000 in my family fund. I'd love to do more. I might end up, again, if the market crashes, I'm gonna plow some money into it and hopefully amplify the returns. But again, I'm sticking with $1,000 a month consistently every month for the next 5 years to get to 100,000. So Copart's currently one of my stocks. I don't see myself selling it or going any other, just depending. The one thing, again, I do want to watch is that the consumer behavior of kind of reducing their coverage and really foregoing insurance. I'm not as concerned about autonomous vehicles, but I am concerned, or I could be concerned about consumers continuing the behavior of basically removing their car insurance, which would not benefit Copart. But what I will say is that I think Copart probably sees this coming and will be able to skate around it and probably pull a rabbit out of the hat. Who knows? Anyways, that's it for me. Thanks for joining.